I run a company and currently save 40% of my gross earnings for tax, GST. Is this going to cover all of my tax and GST and superannuation obligations, or should I be saving more? This is a fantastic question that I got today. I actually recorded a quick video for it, but I figured I'd cover this off in the Ask Aureus Anything anyway. So shout out to Kat. So this is a really good question, and it's important to understand the difference between the relationship of your tax at a company level, assuming you have a proprietary limited company, and your tax as an individual. Now, you need to be mindful that a company has a flat tax rate. So GST is a flat rate, 10% of your goods and services, and your company tax, depending on your turnover, so if it's under 2 mil, it's 28.5. If you're over 2 mil, it's 30. But let's just play it safe. So it seems as though Kat's putting away 40%. So 10% for GST, 30% for the company tax, which is fantastic. But what most people often overlook is that when you pay yourself an income, you are now subject to what's called the marginal tax rate, which is a tiered structure. And this can complicate things a little bit when it comes to planning for your tax liability. So what I advocate that you do, a site that we use really often is a site called paycalculator.com.au, and it's a tax calculator. And you have the ability to chuck in a salary. And what I say for all of my clients is to be aspirational. Work out the salary that you want to work towards. And say, okay, I want to pay myself 120 or 150 grand or whatever it may be. And what it'll actually do is it'll break it down weekly, fortnightly, monthly, annually for you in terms of how much the gross amount would be, how much tax you need to put away, what your equivalent amount of superannuation would be, and then what your net amount should be to your pocket. So the idea should be that superannuation aside, because that's another conversation, as a business owner, you need to make sure that your obligations are met, which is tax and GST. Now, if you are paying yourself a salary in your business, which I do advocate, you are required to pay yourself superannuation at 9.5%. So the 40% isn't going to cut it. It's actually going to work out to in the vicinity of let's say about 45%, because of course you're going to have some costs and things like that. But of course 9.5% whatever the salary is that you pay yourself. So the idea is about doing the calculations first, working out the salary that you want to be earning, drawing the net income out of the business, so and take care of your tax at a company level. So make sure that whatever that number is in the tax part is going into a certain account. Of course, 10% of your goods and services going across into there, and then working out a direct debit, ideally, to going into your superannuation. So hopefully that helps you. It's all about just doing the pre-planning. For most small business people, tax sneaks up on them and doesn't, it catches them off guard. So you should be planning for this stuff in advance so your tax bill doesn't sneak up.